Okay, so now we come to a really important topic, which would be choosing the right stockbroker. Now, when you want to trade in any market, you need a stockbroker to access the market for you. You have to buy through a broker, you have to sell through a broker. So your broker is going to be your most important partner in your trading business. At the same time, the brokerage commissions you pay, whenever you buy shares, you have to pay a commission. You sell shares, you pay a commission, right? So commissions are one of the biggest costs to your trading business. So imagine your broker as kind of like being your landlord as well. You run a business, you have to pay rent to your landlord, right? You've got your office rent. So this represents the rent you got to pay every month, okay? So there are literally thousands of brokers out there, online brokers, and you can go online, you can search for any broker, and you can read all about their terms and conditions, their commission rates, and so on and so forth. So I'm going to show you what are some of the key things to look for in choosing the right stockbroker for you. Now, first, let me begin by saying there is no perfect stockbroker for everyone. So it really depends, which broker you use depends on your situation. For example, how much do you have to deposit into the brokerage account? Like some brokers require you to deposit a minimum of 10,000 US dollars to even begin. Some brokers require only $500, right? Some brokers charge higher commissions, but they've got more services, more charting software available. Some brokers charge lower commissions, but their services may not be as wide in range. So you got to find one that fits you. And I'll tell you which are the brokers I use, and you can make your own decisions from there. So key considerations in choosing a stockbroker. So number one, obviously, will be commission rates and additional charges. So before you start on a broker, find out exactly the commission rates they're charging you and if there are any additional charges, right? So again, commissions are the biggest cost of your trading business. And some brokers charge a fixed rate of, for example, $8 to $10, regardless of the shares you buy. So one of the brokers that I use would be, for example, Think or Swim by TD Ameritrade. And they charge a fixed, if I'm not wrong, $8 per transaction. So you buy it's $8, you sell it's $8, regardless of how many shares you buy. Okay. Now another broker which I use would be Interactive Brokers and Halifax. So these two brokers, they charge based on the number of shares you buy. So they charge, for example, like half a cent to I think 1 or 2 cents per share that you buy, but subjected to a minimum of $1 to $2 per transaction. So you buy it's $2, you sell it's $2. But the more shares you buy, the more they charge. But it's a minimum of $1 to $2, right? So that's how they charge. Now, in general, total commissions should not exceed more than 5% of your capital, right? Ideally, because if it does, then in order for you to make money, you have to cover at least 5% of your capital before you're actually making money. Now, of course, the bigger your capital, for example, if you're trading with a $50,000 account, then a $10 commission is a small percentage of $50,000. But a $10 commission is a big percentage of a $2,000 account. Does this make sense? All right. Okay, so as your account grows, commissions as a percentage of your account will start to drop. So at the initial stages, when your account is still small, your capital is small, it's a bit of a challenge. Once you've got a big enough capital, commissions become a small percentage of your cost. That's a good thing, right? So for example, let's imagine you take 20 trades a month, and that's about 240 trades a year, okay? So each time you buy, it's a round trip. You buy and you sell, so that's times 2. So that's 480 buys and sells, okay? So for example, if you pay, say, $1 minimum per commission for a buy and a sell, your total commissions will be $480 a year, right? So $480 a year divided by $20,000 capital, that's your capital, that represents 2.4% of your capital, and that's fine, right? So anything less than 5% is pretty comfortable. More than that, it's a bit challenging, okay? Next thing you can check with would be, are there any additional charges for data fee? Some brokers charge you a low commission up front, but if you don't have a minimum number of trades a month, they will charge you additional charges like inactivity fees, or they charge you for data. Right? So you've got to be aware of that. So again, whichever broker you're looking at, go to their website, read it thoroughly to understand all the charges and the commission rates. The second thing would be, of course, financial strength. Now, there are many brokers out there that may say, okay, just deposit $200, right? And the commissions are really low. Now, sometimes when something is too good to be true, it could be too good to be true, right? Is that broker credible? How many years has that broker been around? Is it a regulated broker, right? So you got to be aware of these, and all this would be found again on your website. So you want a broker to be financially strong, okay? So check the financial rating of the broker to ensure that it is financially stable. And again, how much minimum deposit must you make with the broker? Okay. For example, if you want to trade with interactive brokers, you need a minimum of 10,000 US dollars to just start the account. Okay. But if you trade with Halifax, all you need is about 2,000 US dollars. It's a lot lower, right? Margin rates. Okay. So oftentimes as a trader, we have to utilize margin. Okay. Not as an investor, but as a trader. What does margin mean? Margin means that if you put in $2,000 into your account, the broker, if they give you 2 times margin, or rather 2 times leverage, it means for every $2,000 you put in, you can buy up to $4,000 worth of shares. If you put in $10,000, you can buy up to $20,000 worth of shares. We call that, 2 times leverage. Some brokers offer you 3 times leverage. So again, for every $2,000 you put in, you can buy up to $6,000. And as a trader, you need this. You need margin. Why? Because we place very tight stop losses and very tight profit targets. So sometimes your position size may be bigger than your capital. And that's fine because your risk is still 1% of your original capital based on your position sizing calculator. Okay. So when you open an account, you have to open either a cash account or a margin account. And my suggestion as a trader is to always open a margin account because margin gives you the flexibility of, again, taking more positions. Plus, with margin, you can short. Whereas if you use a cash account, you can't short. You can only go long on a position. All right, so take a margin account. That's my suggestion. Next, if you're using margin, you have to be aware of the interest rates that they charge you. So obviously, the broker's not going to lend you money for free. Right, so if you put in $2,000 and they lend you another $2,000, they're going to charge you interest on that, right? And the interest is normally quoted per annum, but it's charged on a daily basis. So depending on the broker, right? Some brokers, they can charge you as low as 1.5% interest per year. Some brokers up to 9% interest per year. Okay, so I'll share with you some of the brokers which I use that have got pretty low margin rates. Next, the trading platform. All right, so you want to ensure that the broker that you're using, they have got a trading platform where you have all the necessary features to be a good trader. So for example, you must be able to place stop loss orders, all right, stop entry orders, stop limit entry orders, okay, trailing stop orders if you want, limit orders. They've got the entire range of order types, okay? And most of the US brokers and Australian brokers will have all these features. Next, very important, range of products and markets. So obviously, depending on which market you're trading in, the broker must be able to access that market. Okay. So personally, I only trade the US markets because that's all I need to make, my income, my profits. Okay. But again, within the US markets, I want to trade, for example, stocks. Right. My thing is stocks. So obviously, I trade stocks, right? And I also like to trade CFDs. Right, so CFDs are known as contract for differences, okay, and they allow me to basically buy shares without really buying the underlying share. I buy a contract for difference with the broker, and using CFDs, I'm usually able to buy, for example, $10,000 worth of Apple with only a $1,000 deposit. So I've got 10 times leverage, right? I just need a 10% deposit or margin, we call it margin, to get a 10,000 position size. And that allows me to take on many more positions without using much cash. Now, do be aware that CFDs are only available for non-US citizens, right? So if you're Australian, Singaporean, Indian, you can use CFDs. If you're a US citizen, you can't use CFDs. It's not allowed, right? You have to use options, for example, if you want to leverage more, right? So I ensure that my broker has got stocks, they've got ETFs, they've got CFDs, Now, if you're trading Forex, obviously you need Forex or futures or bonds, which I don't trade, right? So you have to find out, ensure that the broker offers the products that you need, right? Yes, and of course, one other thing, really important, customer service. So you want to ensure that whatever broker you're using, they've got really good customer service. So whenever you got questions, you're able to call their hotline. There's an online live chat service where you can chat with them and they can answer any questions you have. And they also have online video tutorials to show you how to use their platform. So it's critical, right? So let me show you 3 of the brokers that I have used or I'm using, and I'll tell you some of the pros and cons for these brokers. And again, there's no perfect broker. Choose one that fits your needs, right? So one of the brokers that I use is Interactive Brokers. What's great about Interactive Brokers is that they have got the widest range of products, right? So you can trade stocks, CFDs, ETFs over, if I'm not wrong, over 22 markets, okay? The only downside to Interactive Brokers is you need a minimum of US $10,000 to open an account, okay? And you must do a certain minimum number of trades a month, or you get an inactivity fee, or you get charged data fees. And again, their terms and conditions of brokers change all the time. So as I'm saying this, it's now, right? So they may change it. So do go to their website to find out the latest details. But what's great also about Interactive Brokers is that they've got one of the lowest margin rates. And that's what's great about that, right? Let me just mention as well, Interactive Brokers charges on a per share basis. If I'm not wrong, they charge something like about a half a cent per share, okay, with a minimum of $1 per transaction. So the more shares you buy, the more you're charged. It's not a fixed amount, okay? Another broker will be Halifax, right? Now, Halifax is based in Australia, but they use the exact same platform as Interactive Brokers, all right? So they are more or less affiliated, okay? What's great about Halifax is that they have the same features as Interactive Brokers, right? They've got stocks and CFDs and ETFs, access 22 markets, US markets, so I use them a lot. But you don't need 10,000 US to open an account with Halifax. You need, if I'm not wrong, about 2,000 US dollars, right? What I love about them is that they've got great customer service. They attach a direct representative to help my students. And we have got a special group rate with Halifax for our students. So if you're interested, you can send me an email and I can arrange that for you if you're one of our students, right? And if you're part of the course, then you are part of our student community, okay? They also give you pretty much unlimited access to demo trading, where you can trade demo accounts till you're confident, right? But I believe for Interactive Brokers, there's only a 1-month demo account that you can trade. Halifax is more or less pretty unlimited, so that's what's great about them as well, okay? They also charge the same way as Interactive Brokers, where it's a per share basis, but a minimum of a minimum charge per transaction. All right. Now, finally, we have got Thinkorswim, which I use as well. What's great about Thinkorswim is that they've got fantastic charting software, the best charting software, and they charge basically a fixed amount per trade, regardless of how many shares. So you buy 5 shares or 1,000 shares, they charge, if I'm not wrong, about $8 per transaction. And I think it's about 2,000 US to open an account with Thinkorswim. The only thing about Thinkorswim is that they do not offer CFDs. All right, they only offer stocks, ETFs, and options that you can buy on margin as well. And they've got slightly higher margin rates than Interactive Brokers and Halifax. And Interactive Brokers and Halifax have much lower margin rates. But Thinkorswim has got fantastic charting platform, right? So again, they all have their pros and cons. So my suggestion is go to their websites, read more about them. And again, if you want our group rate, you can send me an email and I can arrange that for you. All right, so this concludes our discussion on choosing the right broker and concludes this whole lesson on trading plan and resources. So with this, I'm Adam Khoo. If you've got any questions, send me an email. I'll be happy to help you on your journey to become a professional trader. Thank you.